Yeah, today's topic is swing trading the trend, and this is one of my favorite strategies. I run about 4 strategies, but this one is going for a shorter term option trade, usually 2 to 3 months max, and we're going with the trend, and I'll show you how we identify that and what stocks we're looking for. One other thing I'd like to show you on this first page is not only do we have Brethauer Options Mentoring.com, but we just started www.optionsinfinity.com, and that's what I'm going to be offering you today. On this website, what I do basically every night when the market closes, I talk about the trade setups that I see for the next day. And this is kind of like looking over the shoulder of a professional as I'm trading the market. This is a live video that I record and then send out to you on an email. And year to date, this portfolio is returning 139%. So listen closely, and I'll be offering this to you towards the end of the presentation. The other thing is, as we go through, anybody have any questions? I've got the question board right in front of me. I'll try to stop and answer that question right away, because I know when a question comes in your mind, you'll be thinking about that and not listening to what I'm saying. So put it on the board, and I'll get to it, and we'll try to go through it that way. What are we going to talk about today? You're going to learn about financially strong stocks. Financially strong stocks, and why these stocks outperform the market. Then I'm going to show you the list of 2014 financially strong stocks, and believe it or not, it's only 22. It's only 22. And I'll tell you the exact fundamental analysis indicators that I use, Alex, and it's very easy. As Reed said, I worked for DuPont when I first started out in my career. I worked in mergers and acquisition. I had an MBA, and I knew the value of cash from operations, not earnings. Earnings is only part of the story. Cash from operations is all the money the corporations make, and if you follow a trend of positive cash from operations, you're going to have financially strong stocks. I'm going to show you the indicators I use. I love the regression channel. John was talking about the money flow index. I like the exponential moving average ribbon, stochastic slow, and the macro MACD is something that I developed. Then we're going to talk about the leverage of using in the money. I go for about 10% in the money options that have a delta of about 80%. Okay, 0.80, and that means that for every dollar the stock moves, the option is going to move about 80 cents. I'll show you my trading record this year, and like I said, we're up 139% year to date. Then I'm going to actually go over some real trades, and then I'm going to show you my Thinkorswim platform and show you 3 trades that we just got out of: Stryker, Starbucks, and Coca-Cola. And then we'll finish up talking about generating income for financial freedom. Alrighty. This is a chart that I put together on bigcharts.com, and basically what I'm showing is the black line is the S&P 500 that has been normalized. The blue is Monsanto, the gold is Caterpillar, and I don't know what that color is, mauve I guess, is Danaher, DHR. Basically what you can get out of this chart is the fact that financially strong stocks outperform the S&P 500. You can see back in before the crash, Monsanto was outperforming the market by 700%. Then it fell like crazy. Well, what's interesting is that financially strong stocks outperform the market, but the bigger they are, the harder they fall, okay? So we can grab calls on the way up and puts on the way down. And I've found that a small market basket of financially strong stocks really does way outperform the market. Way outperform the market. This is an example of what I look for, and this is a cash from operations. And I'm not going to go through all this, but you can see, you know, earnings is the beginning of the cash flow statement. It's the beginning. Then you add things in like depreciation, changes in working capital, to finally come up with the net cash from operating activities. Now, this can be found in all financial reports, okay? And this can be found in quarterly reports. But what I'm looking for is I'm looking for stocks that have a positive trend over 5 years. I'm not looking for any IPOs. I'm not looking for any flash in the pan. I'm looking for a rock solid, financially strong stock. Okay, this is Abbott Labs, and this, I put this together a long time ago. It only comes up to 2011, but look at the trend here. 5.3 billion stays about the same, then goes up to about 7, 7.2, 8.7. This is a financially strong stock with a positive trend in cash from operations. What does that mean? That means that Abbott Labs has more money than all its competitors. Now what I look at is all the different market sectors, and I pick the best of the best. And then I look at all the stocks in the market sectors, and I pick the best of the best. And I come up with a very small market basket of financially strong stocks. Right now we have 22. And that's my list for this year. Now everybody that's a member of the websites gets this list. I go through and do this every March. Every March I go through and pick out the stocks that I want to watch for that year. Okay? And what I've found out is that with a small group of stocks, you really get to know these stocks. I mean, I'm not going through, I mean, there's 7,500 publicly traded corporations. I'm looking at 22. I mean, I could close my eyes and tell you exactly what the chart of Coca-Cola looks like. Therefore, I intimately know that. Okay, so I know what I'm looking for. And the smaller the basket, the more you become familiar with these stocks, the better you can trigger a signal. Sarah says, is your strategy primarily for options trading? No, it is not. I trade a hedge fund and my own personal account. And most of the hedge fund and most of my personal account is in stock. It's in stock because they're very large accounts. Okay? This strategy works beautifully for stocks. And then if you want to zero in, if you don't have a large portfolio and you want that portfolio to grow, you get a little bit tighter on what you're going to choose, and you go in with options. So it's both for stock and it's for options. Okay? It can be also used for futures. Now this list doesn't change very much. This year I had 8 that dropped off, 7 that dropped off and brought in 8. Okay? So the ones that are in bold are the ones that were brought in new this year. Amazon has been on the list for a long time. Apple's been on the list, I think, for 12 years. Baxter, Caterpillar, these are some rock solid stocks, and these are the ones that I want to follow. Okay, here's my indicators that I use. The first thing I do, and this is a stock of, we're looking at eBay, is I look at the regression channel. Now, in purple is the regression line, and it is calculated by taking 50% of the price above and 50% of the price below. It's an excellent trend line. Then what I'm looking at is plus or minus 1 standard deviation. Statistically, what that means is that when I go up or down plus or minus 1, 67% of all prices will be contained within the plus or minus 1. Okay? The gold line is plus or minus 2. Plus or minus 2 statistically says that 95% of all prices will be contained within that. So you look at that almost like the casing on some sausage, okay? Yeah, occasionally you'll get some meat squeezing out, but most of the time it's contained within here. What a wonderful, wonderful indicator. The regression channel is probably my #1 indicator to tell me when to get in and when to get out. What I'm looking for is overbought, oversold conditions. If I know statistically that when eBay is outside the casing here, that it's way outside, and you think in terms of this purple regression line as being a giant magnet, and the further out it gets, the harder it's going to pull it back. And usually what happens is it pulls it back and it overshoots it. And then it pulls it back and it overshoots it. And that's the way the market trades. The market doesn't just go straight up and straight down. It goes up, down, up, down, up, down, with no rhyme to reason. Fear and greed, buying and selling, emotional. But if you know that where you are in the regression channel, you know whether you should be buying calls or whether you should be buying puts. The next thing I'll follow is money flow index. When we are oversold and you start seeing money flowing back into that stock, you know that some strength is coming in. So I always look at the left-hand chart first to say, okay, this right here is a call opportunity. Then I come over to the right-hand chart and I'm looking with candles. I'm looking for the 5, 8, and 13-day exponential moving average line. I'm looking at the slow stochastics, and I'm looking at the daily version of the weekly MACD. If I'm green, that's a go. If I'm red, it's like, hold on for a second. Okay, so those are the indicators that I use, and those are the only indicators I use. Like John was saying, you don't want to get analysis paralysis. This is pretty simple. All my charts come up with these indicators, and that's all I'm looking for. Alex says positive cash flow from operations sounds hard to dig up. How do you do it? Let's see. I use the name of the website escapes me. I think it's Guru Focus. Guru Focus, and basically they have all the market sectors and they have all the stocks and all the financial reports. So it's very easy to go in there and very quickly see a positive trend. You can do this yourself. I do it for all my members. Okay, let's talk about the leverage of using in the money options. Okay, this is an example of Nike. This was back in October 15th of this year when Nike was at 85.11. So if I wanted to buy 100 shares of Nike, I had to put out $8,500. Now, by the 5th of December, Nike had gone to 99.32, a nice rise, a rise of $1,421 or 16.7%. You can't beat that. You can't beat that. However, if you would have bought a 10% in the money call, now remember, Nike's at 85. Okay, so I'm looking to get a 10% in the money. See, options are made up of two components. One is the intrinsic value or the real value. In other words, if I have a 75 call and it's at 85, it has a real value of 10. Okay, the other component is time value. And I go far enough out, about 2 to 3 months out, that the time value really hasn't started to decay too much. So if I'm in the money and I've got a delta of 0.8, again, that's for every dollar the stock moves, this moves 80 cents. and I go in here and at 85, I get a January 77.5 call. It's going to cost me $9.13 or $913. Okay, and I'm going to control the same amount I had up here for $8,500. Now, this price, this call went to 2163, which went up about the same amount, not quite, about the same amount. I mean, if you took this number times 0.8, you'd get this number, very close to it. And the difference being I spent less money and I made more money on that less money. And that's the leverage of in-the-money options. They're not as risky as at the money, and they're nearly as risky as out of the money. Most out-of-the-money options expire worthless. Now, at the beginning of this year, I tried a double-up challenge, and this is basically, I started out with a $25,000 portfolio, and every night on my nightly video blog, I talk about which stocks that I'm going to get into the very next day. And you can see that, and I'm up for December, so it looks like we're going to have a year where I was up every single month. Now, you look at the Dow, this isn't the Dow, this is the S&P. The S&P was down this month, and if it continues on, it's going to be down this month. So that's down 3 months. It's still going to end up, I think, plus, right around 6 or 7%. You compare that to something very close to 150%, and you can see that you can beat the market. If you have financially strong stocks and you follow a set number of indicators and you get in when it's ready, that's the way to do it. Max, is this going to be recorded? Absolutely. This is recorded. Reed, and I think Reed sends it out to you tomorrow. And when you talk about recordings, that's what I do with the video blog every night. It's about 10 to 15 minutes every night, and that is recorded, and you've got access to that. I send that to you via email shortly thereafter. Okay, let's look at some actual trades. This first trade is a trade I made on PepsiCo, and it was right around this period here, and you can see that it was overbought. So it was overbought, and the money flow was starting to go down, so naturally I'm looking for a put. Right up here, you can see the stochastics was going down. I got a red, and I always go with 3 days of red. In other words, I want a ready, set, go. Ready, set, go. This has changed, and I get ready, set, go, and I get in, and I took this all the way down to a Fibonacci of 26. This is a way overextended Fibonacci, 261.8%. Got out here. The nice thing about getting out when you have a large Fibonacci or an overextended Fibonacci is that you're getting out when the market is still going in the direction of your trade. And when the market's going in the direction of your trade, the premiums are going to be higher than if I waited for it to turn around and said, well, now I got a ribbon cross, now I'm going to get out. A lot of the premium would erode here. So I want to get out while I'm going in the direction of the trade. This trade right here, I bought a January 90 put for $5.40 and sold it right down here at $8.75. I told the people the night before I bought this, I told the people the night before I sold it, and why, and we all collected 62%. Now, this is PepsiCo going up, okay, because we took it all the way down here, and now all of a sudden it's down around the -2 on the regression channel, and that means it is oversold. It's oversold. So I start looking for money coming back into PepsiCo, and when it did, then I go from the left-hand side over to the right-hand side. I look for the ready, set, go, and I got in right here, okay? Followed this on up to a Fibonacci of 261.8, got out right here. Bought an April 72.5 call in the money, $6.28, sold it for $12.80, 104% in about 2 months, a little bit less than 2 months. How many trades a month, John? Well, with only, actually, there are 22 stocks, financially strong stocks, but only about 15 do I follow all the time for options because they're right around $50. Apple's right around 100. I don't really have that. I buy stock in Apple. Caterpillar's up around 110. Those are off the list for options. I'm always looking for options that are about $50. Right now we have 4 options available. We're in Qualcomm, we're in Harley-Davidson, we're in Coca-Cola, and we're in Starbucks. Okay, 1 call, 3 puts. 1 call, 3 puts. What's the time of expiration for these options? I usually go out, like I said, usually 2-3 months. 100 days is kind of the cutoff, but I don't want it short term. I don't want 30 days. I don't want 100 days, so I want somewhere in between there. So getting back, John, to your question, how many trades per month? We're probably looking at, I would say on average, we're looking at 2 to 3 a week. And not a, yeah, 10. I think roughly 10. John, stocks and options, you can do it for both. Absolutely, you can do it for both. It's actually easier to trade stocks than it is options because for stock, for PepsiCo, as soon as it got to be oversold, I was a buyer. That's about all I do for stocks. And I just let the market do its thing. Whereas options, I go over to this screen and I need to be a little bit more critical because I've got time against me and I want to make sure that it explodes when it, and you know, it's got the ready, set, go. I want to give it some time and let it explode, whereas if I buy the stocks, you know, I not only have plenty of time, I don't have any time constraints, but I'm going to get the dividends. I can kind of let it work. This is where I bought Amgen. I bought the stock here, and so like I was saying, for buying stock, I was really interested in Amgen when it got around here. I was the buyer of stock right around here, and that was around May, the 9th of May, and I got out. I actually got out right around here because when it was between the +1 and +2, I had already made a boatload of money, and I said, thank you very much. I missed this final push, but I'm okay with that. I'm okay with that. Okay? In this particular case, I got in at 111 and got out at 137 for a nice little profit on a round lot of Amgen. Jay says, what size account do you trade with this method? Well, see, like I said, in my hedge fund and my personal accounts, which are very large, you know, most of it's in stock, but usually about 10 to 20% of it is in options. Now, what you're going to have to do is look at your portfolio and say, hey, what size portfolio do you have? Let's say you have a $100,000 portfolio. You probably want to put $80,000 of that in stock and stock alone, and maybe have a $20,000 account for option trading. How much, what's the minimum? People are always saying, what's the minimum? And that really surprises me because You want to paper trade and learn this strategy first, and then go in small. But then, you know, you shouldn't worry about the minimum, because it's going to all depend. Like if you had $10,000, you can do this. I just would only put $1,000 per trade, maybe even $500 per trade. Okay, and I teach this. I teach the exact trade size you need for the portfolio size that you have. Okay, I think I've got one more example here, and that is GDX. Okay, the ETF for the gold miners ETF, and this was let's see, when was this? This was back in here. No, this was back, let's see, when was this? Was this, yeah, it was right around here. And I got in with a February 20 call for $1.89 and sold it for $6.65, 252%, okay, in 2 months. 262% in 2 months on this little rise right here. It was oversold. It got to be overbought. There it is, falling right along with the 5, 8, and 13-day exponential moving average line all the way up to the 261.8 Fibonacci. Got in down here, got out up here, bingo. Okay? So you say, well, Dale, you know, that's all nice. You just picked those out of the blue. Let's take a look at some actual trades. I hope everybody can see this. This is, we just got out of Striker. We took Striker from down here, okay, when it was oversold, and the money flow started going back in, and we got into Striker right here, ready, set, go. Right here, we were in Striker, and we took this all the way up. Now, the Fibonacci's actually didn't come out on this one, but when I got up around between the +1 and the +2, I was plenty happy. This was 181% profit, and I was plenty happy, and I got out. Yeah, Dennis, I have 3 moving averages that I follow. That's the 5-day, the 8-day, and the 13-day. And the reason I look at the 5, 8, and 13 is I'm a big believer in Fibonacci's. And the Fibonacci number sequence, the 5, 8, and 13 are key numbers in that number sequence. And you'll see a lot of times when it crosses over, when the 5 and the 8 stay above the 13, yeah, you'll have a little bit of pullback every once in a while, but if it doesn't cross over, it continues on, you know, just stay with it. Stay with that trend. 5, 8, and 13-day. Exponential moving average, Eric. Exponential. I'm sure it'll work with simple moving average. I just love the exponential because it puts more emphasis on the more near term, and I think that's important. The other one I want to show you real quick is Starbucks. Starbucks we just got out of, and just the other day we bought a put. But we got this one, and we took this one when it was oversold. See the money flow starting to go back in here. Okay, we actually waited till after this guy right here. That was earnings. If I'm looking at a stock and I know that I got about a week before earnings, I will stay out, because earnings, you never know what's going to happen. And earnings could be tremendously, you know, bullish, you think, and the stock could get clobbered. So really what I'm looking for is the market reaction to earnings, not whether it made more money or less. I'm looking for the market reaction. Starbucks, we took this guy all the way up here, and we got in, let's see, we got in October 21st, which is right here. Okay, we got in right there and rode this all the way up to the 5th of December, right there. Okay, and that was 147%. 147%. I think maybe you're saying that, you know, these things happen. Now, do I have losers? Absolutely. Absolutely. This is maybe about a 60-40, 60% winners, 40% losers. But the losers, when I have a loser, I lose a lot less. Usually when it's around 30%, I'm like, this analysis didn't work for me. And you got to check your ego and just get out. Just get out. How do you set up the MACD indicator? This MACD is the daily version of the weekly MACD. If you go in the default and set it up 4 times what the default is, you'll have the daily version of the weekly MACD. The reason why I love that is because it doesn't swing so much as the daily MACD. The daily MACD, you've got a lot of whipsaw going on. The last one I want to show you is Coca-Cola. And Coca-Cola is one that we just got in with a put right here. Okay, ready, set, go. All right, and you can see that it was overbought. Money flow's starting to go out. You're starting to see how this jives. I'm looking on the left-hand chart first to see that, do I want to get into a put or do I want to get into a call? And if I want to get into a put, then I come over here and I start looking and saying, okay, there's the ready, set, go. Stochastics are going down. I'm in. And in 5 days, we jumped out because it was coming down here, and we made 52%. Do you do credit and debit spreads and iron condors? Absolutely, but not on these guys. Not on stock that are $50. The ones that I do credit spreads, no debit spreads, credit spreads are what I call the big boys. Amazon, Netflix, Priceline, Google, and the RUT. You notice all these guys are big boys, and they have higher credits. Higher credits. So I always I sell theta, I sell premium, but only on the big boys. Absolutely. But not using this strategy. I've got another strategy for selling. No, Eric, no straddles into earnings, because for Priceline, let's bring up Priceline here for a second. For Priceline, and let's take a look at the last earnings. Let's say I had you look at this and you say, okay, that's an easy thing. You just set up a straddle, and you buy a put and a call, and you've got this thing straddled, and bam, it works out. What happens if 90% of the time the earnings stays within that range? Whoops. Then you've lost big time, okay? Earnings is not the time to profit in anything. Neither a straddle nor an iron condor work. And you surely don't want to pick a direction, because if you're going to do that, I would suggest you go to your local casino and just put it on red or black on the roulette table. We're talking about smart investing, okay? In earnings, the smart thing to do is get out. Stay on the sidelines. Richard, I'll tell you what, the last time I was a guest speaker here, I talked about credit spread mastery. Now, I tell you what I'll do. Richard, at the end I'm going to give you my email address. If you send me an email and say you want a copy of that, well, actually I don't have a copy, Reed. I don't know what's the best way to do that, but we'll worry about that later. It's recorded somewhere, but and I can find it for you, Richard. Send me an email. Okay, let's get back over here. Now, I always finish with this last chart because what you want to do is you want to generate income and have financial freedom. You want to have financial freedom. Let me just check one thing here. Okay. Reed, I'm about finished, so I think we're in good shape. Dr. Van Tharp really turned my trading around. I knew what I was doing. I was doing very well, But he is a psychologist that teaches you discipline, teaches you need to follow the rules. You need to you just need to check your ego at the door. I was trained in an MBA, so I've got a very analytical mind, and that's not the kind of mind you want to have for the stock market. You want to completely divorce that, because the stock market, it'll chew you up. Okay? Dr. Van Tharp says, financial freedom is really a new way to think about money. Most people think they win the game having the most money and the most toys. Financial freedom means that your money works for you and makes more money than you need to meet your monthly expenses. Okay, nice goal to start out. What are your monthly expenses? What kind of returns are you expecting to get? What kind of portfolio do they need to get that so that you can meet your monthly expenses? What a great way to start. That's the way to start. Now, that doesn't mean you won't spend hundreds or even thousands of hours building the foundation for your financial freedom. I was watching a movie the other night, and the definition of Kung Fu is doing something repetitively over 10,000 hours till you get Kung Fu. Okay, that's what you need in the stock market. You need to put the time in. I have probably spent hundreds of thousands of hours. And now it looks, and what I do is very easy. I sleep good at night with no anxiety. When I see some setup, I pull the trigger. I have no problems with it, but I have done my homework. Now, the final thing is, do you want a large bank account? Well, the financial planners will say that's what you ought to have. I'd rather have consistent cash flow, and that's what this will bring you. Whoops. Okay. What I'd like to invite you all to do is go to www.optionsinfinity.com, optionsinfinity.com. And that's where you can get the nightly video blog. I do this from Sunday to Thursday. It's about 10 to 15 minutes every night. It's like you're looking over my shoulder as I trade the markets. Okay, I already have tonight's on, and what I'm recommend. I can't recommend because I'm not a registered broker. What I do on the video blog is say, you're looking over my shoulder. Now it's your thing. Okay. So this has returned 139% year to date based on that $25,000 portfolio. I only put $1,000 per trade, so really on a per trade basis it's a lot higher than that. Okay, what you get. Every night I talk about the market insight, the long and near term trend. We talk about directional calls and puts on the financially strong. I go over our monthly credit spreads and weekly options. In addition to that, you have 2 hours of instructional video that talk about how I set all these up, how you set up your charts, and what you need to know to follow me. And for that, it's $49 a month with a 30-day guarantee. You look over the shoulder of a professional. I'm here to help you. My email address, let me see, let me go way back to the beginning if I can. Okay, it's Brethauer, Brethauer @comcast.net. Any questions you can email me there. Let's see, which money flow indicator do you prefer? I go with the default on MFI, absolutely. Okay, perfect. Reed, I think that's it. I don't know what time it is and how I did, but I'm done.